Hey there, savvy investors. Did you know that the average person spends a whopping $300 on non-essential items every month? That's a staggering amount that could be put to much better use, don't you think? Welcome to our guide on smart investment tips and tricks for 2024. Today, we're diving into the world of frugal living and how it can revolutionize your financial health and overall well-being. Buckle up, because we're about to embark on a journey towards financial freedom. Investing can be a daunting task for many people, but with the right knowledge and strategies, it can also be a lucrative way to grow your wealth. In today's fast-paced world, staying ahead of the game when it comes to investing is crucial. With the rise of technology and the ever-changing market trends, it's important to stay informed and adapt to the new landscape of investing. One of the first things to consider when looking to make smart investments is to diversify your portfolio. This means spreading your investments across different asset classes, such as stocks, bonds, real estate, and commodities. By diversifying, you can reduce your risk and increase your chances of earning a higher return on your investments. Another important tip is to do your research before making any investment decisions. This means staying informed about the latest market trends, economic indicators, and company news. By staying informed, you can make more informed decisions about where to put your money and when to buy or sell assets. It's also important to have a long-term investment strategy in place. While it can be tempting to try to time the market and make quick profits, the reality is that investing is a long-term game. By having a clear investment strategy in place, you can avoid making impulsive decisions and stay focused on your long-term financial goals. One strategy that many successful investors use is dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of market conditions. By consistently investing over time, you can take advantage of market fluctuations and potentially lower your average cost per share. When it comes to investing in stocks, it's important to do your due diligence and research the companies you're interested in. Look for companies with strong fundamentals, a solid track record of growth, and a competitive advantage in their industry. Another important tip is to consider investing in index funds or exchange-traded funds, ETFs. These funds offer a diversified portfolio of assets and can provide a low-cost way to invest in the market. By investing in index funds or ETFs, you can take advantage of broad market exposure and potentially lower your risk. When it comes to investing in real estate, it's important to do your homework and understand the local market conditions. Look for properties in desirable locations with strong rental potential and potential for appreciation. By investing in real estate, you can diversify your portfolio and potentially earn passive income through rental properties. One more tip for smart investing is to stay disciplined and avoid emotional decision-making. Investing smartly can significantly boost your wealth and secure your financial future. Here are some tips and tricks to make money through smart investments in 2024. 1. Start with a solid financial foundation. Build an emergency fund. Save 3 to 6 months' worth of living expenses to cover unexpected costs. This ensures you won't need to dip into investments in case of emergencies. Pay off high-interest debt. Prioritize paying off high-interest debt, such as credit card balances. This reduces financial pressure and frees up more money for investing. 2. Set clear financial goals. Define your objectives. Know what you want to achieve with your investments. Are you looking for retirement savings, buying a home, or growing wealth? Determine your time horizon. Your investment strategy will depend on how long you plan to invest. Longer time horizons can generally handle more risk. 3. Diversify your portfolio, asset allocation. Spread your investments across different asset classes, stocks, bonds, real estate, commodities, to reduce risk. 4. Invest in stocks. Blue chip stocks. Invest in well-established companies with a track record of stability and consistent returns. These are generally safer bets for long-term growth. Growth stocks. Look for companies with high growth potential. These can be more volatile, but offer higher returns. Dividend stocks. Invest in companies that pay regular dividends. This provides a steady income stream and can be reinvested to compound your returns. 5. Explore real estate investments. REITs, real estate investment trusts, allow you to invest in real estate without owning physical property. They offer high dividends and diversification. Rental properties. Investing in rental properties can provide regular rental income and potential property value appreciation. 6. Consider alternative investments. Cryptocurrencies. Allocate a small portion of your portfolio to cryptocurrencies if you're comfortable with higher risk and volatility. Precious metals. Gold and silver can act as a hedge against inflation and economic instability. Peer-to-peer lending. 7. Leverage technology and robo-advisors. Automated investing. Use robo-advisors like Betterment or Wealthfront for low-cost automated investment management tailored to your goals and risk tolerance. Investment apps. Apps like Robinhood or Acorns make it easy to invest small amounts of money and offer user-friendly platforms for beginners. 8. Regularly review and rebalance your portfolio. Periodic checkups. Review your portfolio regularly, e.g., quarterly or annually, to ensure it aligns with your financial goals and risk tolerance. Rebalancing. Adjust your asset allocation as needed to maintain your desired risk level. Rebalancing involves selling high-performing assets and buying underperforming ones to keep your portfolio balanced. 9. Take advantage of tax-advantaged accounts, retirement accounts. Maximize contributions to 401ks, IRAs, and Roth IRAs. These accounts offer tax benefits that can significantly boost your long-term returns. Health savings accounts, HSAs, if eligible, contribute to an HSA. HSAs offer triple tax benefits: tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. 10. Educate yourself continuously. Read books and articles. Invest in your financial education by reading investment books and articles. Understanding market principles and strategies can lead to better decision-making. Follow financial news. Stay updated on market trends, economic news, and investment opportunities. This knowledge helps you make informed decisions. Take courses. Enroll in online courses or attend seminars on investing. Continuous learning enhances your investment acumen. 11. Adopt a long-term perspective. Stay patient. Investing is a long-term game. Avoid making impulsive decisions based on short-term market fluctuations. Compounding. Reinvest your earnings to take advantage of compounding. 12. Work with professionals. Financial advisor. In conclusion, investing can be a powerful way to grow your wealth and achieve your financial goals. By following these smart investment tips and tricks, you can increase your chances of success and build a strong financial future for yourself and your family. Remember to stay informed, diversify your portfolio, have a long-term investment strategy, and stay disciplined in your decision-making. With the right knowledge and strategies, you can make smart investments and secure your financial future. Please subscribe to the channel to get more information on financial freedom and wealth management. There are 2 videos that I prepared for you. These videos will add more value to your life. Click on one of them and watch to improve your wealth mindset.